what is this super regulator going to be about? We know we have a central bank, we have 3 commissions on the securities, the insurance, and also banking. So how is this super regulator going to function? Do we know, Mr. Xu?
I think the rationale is to improve coordination so that if we have next financial jitters or crisis, then all the regulatory bodies can work together. But in order to do that, you need to have a super agency in charge.
All right. How will this super agency function? Will that be the cabinet level, as they say, or is it going to be more with the People's Bank of China, which is the central bank here in this country?
Well,
Professor Xiao.
I think this is unique for China. The State Council is essentially necessary in completing the task of financial stability, because a lot of problems comes from the local government and also state-owned enterprises, and they are much more powerful than in other countries. So that's why they have this so-called super regulator, but actually this is a State Council Financial Stability and Development Board, very much like National Development Reform Commission, which is for the real sector. For the financial sector, for China's unique situations, we need such thing like this one.
Mr. Xu, do you like that comparison?
Not exactly, because if we recall what happened a few years ago in the stock market,
that's right.
A mini crisis actually was getting worse. To a large extent, that has to do with a poor coordination between various regulatory bodies.
Or among them.
Yes, there were 3 of them. So I think the rationale of creating this agency is not about dealing with the real economy, whether it's local government debt or SOEs. It's about preventing systemic risk.
Okay, we don't know the details yet. That is why we can debate about it, because I guess there are a lot of ideas popping up at this point as to how things should be done. Mr. Hess, you've been a long-time China hand, I would say, even young in age, but what do you make of this new move, or at least new idea? How is this likely to compare China's earlier history of having regulators? And how is this likely to compare, let's just say, your system back in the United States?
I think it's an important question. And one thing I would mention, though, that even before this latest working conference, the central bank was given authority to create a unified database of financial information. So one of the issues of coordination is that there's not good data sharing between the agencies. So the banking regulator doesn't know what's happening in the securities front with risks that might flow back to the banking sector. The same goes with insurance, and that's an important step. So to get the coordination moving. But I think it's always difficult if you're taking agencies that aren't working well together and then put another agency on top of them. Historically the experience has been mixed, where it doesn't necessarily make them cooperate better, it just adds a layer of bureaucracy and reporting. So I think we'll really have to see how it plays out and make sure that the flows, especially of information and data between agencies, to get back to the central bank, and so those with the authority to really coordinate regulation have the best information to do so.
Right. Well, Mr. Xiao, Professor, even right after this news was coming out, people began to talk about that and discuss it, and they say, well, the cabinet is regulated it anyway, because all of these central bank and also the 3 regulatory commissions, they go to the State Council to have meetings anyway. So it's happening there. So now what is happening is just to have a name of the earlier mechanism and establish it as a platform rather than the earlier casual way of putting it together. So Professor Xiao, what do you make of this comparison? Is that the rationale?
Well, I think the key here is that there are a lot of financial regulatory arbitrage, and basically means that some new sectors, emerging, you don't have regulation there yet, but then the market is already so powerful, and a lot of speculations and all these kind of things happening. So in a way, the reason I compare to NDRC is because you really need reform, and you also need the development So it's a learning process. It's a try and error, and then you need to create new institutions to plug the holes, in a regulation. So that's why that kind of task is not like some super regulator, in the West. It's really institutional building and try and error process.
Right.
Yeah.
The reason why we talk about this is not just for the sake of the so-called super regulator. It's really about how much risk has there been in the Chinese financial sector and system, and how much risk will there be continuously for the future, and how to find solutions to make things much less risky than it used to be. So here's the thing, Mr. Xu, from your perspective, what are some of the areas that are most risky, let's just say, within the financial systems? Have this national work conference, which is held only 5 years, only once every 5 years, address that? Remember, there's one word used in the document, it's called eternal. Eternal solution has to be sought in order to avoid the financial risks. So what is it?
Well, I think, Tianwei, you have asked two questions. One question is, what's a major risk? I think the major risk right now is being commonly identified as leverage in corporate sector. I think that's the biggest source of risk in the medium term, not in the short term yet. Now, the super agency, whether that's going to be a solution, I suspect not. The solution to leverage is going to be slower economic growth rate and continued reform, particularly state-owned sector. But the purpose of this agency is to prevent the repeat of what happened in stock market in 2015. I think that risk could be mitigated a few years ago.
Okay, things to talk about the leverage ratio risks. Let's take a look at some of the numbers that we still got for our audience. Take a look at these. Leverage ratios of major economies, according to the Bank of International Settlements, up to late September of 2016, China's overall leverage ratio is about 250%